Welcome to my $100,000 stock experiment, Sell Rules, week number 25. I'm sharing my stock journey as I practice and develop my sell rules. This isn't an endorsement to purchase any stocks that I've bought, nor is it an endorsement to purchase stocks in general. My focus is on sell rules. This needs daily attention, and it's not a buy and hold strategy. The basic premise of my experiment, my start date was April 13, 2018. I had $100,000 to invest. My goal is to double my money in 1 year. My focus is on practicing and developing sell rules. And I'm trading in my rollover Roth IRA, so I have a bunch of free trades and there's no tax implications here, so I don't need to consider capital gains or other tax implications in this experiment. I revised my sell rules this week, so they're a little clearer and also actionable. So my first sell rule is hold a minimum of 6 weeks. I had that 4 to 6 weeks, and previously I had it set at 8 weeks, but now I'm going to try and see if I can live with it at 6 weeks. I also have sell triggers. So when I purchase a stock, I set a sell trigger. Initially, I set it at 8% below the purchase price, and I'm calling that my floor. After a stock goes up 10%, I change the floor to a variation of the violation of the 20-day exponential moving average, and I'm going to explain that in a minute. At 8 weeks, I do a check-in, and I sell stocks if they haven't gained at least 4%. And I continue to monitor weekly gain to make sure a stock is gaining a minimum of 0.5% a week. And my last rule is to watch stocks that I've sold to look for any repurchase opportunities. I purchased one stock, StrataSkin Sciences, this week, and sold two, EVOP and RFP. I'll go ahead and review those charts now. This is a chart for EVO payments, and it's showing the 8% loss rule. I set that yellow bar. I purchased the stock at that dash green bar up at the top, and the yellow bar is 8% below that. I did end up selling the stock a little further below that 8% line. I sold it at a loss of 9.5%, where that dashed red bar and the intersection of that orange box. So I got kicked out of the stock in about 2 weeks. RFP, I wasn't able to get out of it at the 8%. I did get out at the 11%. So I took a bigger loss in this than I wanted, but I'm out of it now. StrataSkin Sciences, SSKN. It's up 1.7 since I purchased it. And this is the lowest price shares of a stock that I've purchased. I did buy Tandem at $8.10. So I'm hoping that this stock goes up, but I typically do not purchase stocks that are this low. And IBD rules is that you're supposed to buy stocks above $15, but my Tandem-like screen is for picking stocks that are under $15, but I'm not sure I like it this low. I reviewed all my charts like I do every week, and there are a few that I want to share with you that are of note, but I'm not going to go through every one of them in this presentation. I gave a presentation at the Los Gatos Investors Business Daily meetup this week, and I was commenting that I wasn't really happy with how my 20-day exponential moving average was working. And a woman there, Franca, she reminded me that at the joint IBD meetup in April that Steve Sweets had given a presentation on how he was using it. And I adopted a variation of his implementation of this violation of the 20-day. His is actually a 21-day exponential moving average. The light blue diagonal bar is showing the 20-day exponential moving average. The purple arrow is pointing to the day that the stock closed below the exponential moving average. And up at the very top, you can see that the low for that day was 38.71. So the rule is that you put your floor at 1% below the low for the day that it closed below the 20-day exponential moving average. So the low was 38.71. If you multiply that times 0.99, that's 1% less than 100, it gives you a new floor of $38.32. And that's where I drew that yellow line. So if the stock hits that mark, then I should be selling. Once the stock goes back above the exponential moving average of 20 days, that light blue line, then that floor resets and becomes again the 20-day exponential moving average, and you wait for the stock to just continue going up or to cross and close below that 20-day exponential moving average, and then you set a new floor. Stitch Fix. This is a loser stock, but I'm still holding it, and I'll explain why I'm holding it, but it's just about at that 8% mark now. It had been down as much as 15%, and I haven't gotten out of it. So the reason that I'm still in this stock is because I did a previous purchase that you can see at the green bar that's down in the middle of the screen. And then less than a week later, I got kicked out of it. And then it had a huge run up. And now the same thing. I bought it and then it's tanking and then it looks like it's coming back. It also had, I'm pointing to the earnings with the purple arrow. It had a huge volume and a run up after earnings. And I read today in the IBD newspaper that the earnings are coming up this week. So I am going to go ahead and hold on to Stitch Fix through earnings, and hopefully it will go up and not tank. And this is my big winner, Champions Oncology. I've had it 2 weeks and it's up 50%. And you can see circled down at the bottom in purple, the volume has just exploded. Here's my holdings that I've held for more than 2 weeks. And you can see that Omnicell in the middle has gone up slightly, and that NSP is going up a little, and PetQ dropped from last week and is basically down to the price it was 3 weeks ago. Here's a holdings bar chart for stocks that I've held for 2 weeks or less. And you can see the CSBR is up 49%, almost 50%. Awesome for 2 weeks. But don't let that overshadow that Funko is up 6%, Sale is up 7%, and Tandem is up 5%. So I have a few stocks that are moving on up, and one of them that has skyrocketed. Current gains. I sort this by my losers. So I really want to be focusing on my losers and cut them out of my portfolio, and the winners will take care of themselves. And then the cumulative total for the stocks that I currently have in my portfolio is down at the very bottom. So Stitch Fix is my big loser. I've lost a total of $849 in that since I've owned it. That's my total loss there. And Band is the other one that is a loser, down $33. Big winner down at the bottom is amazing because $4,994 I've gained in that stock in 2 weeks, and that's more in PetQ that I've gained in many, many weeks. So just because you've had a stock for a very short period doesn't mean that it can't increase more than your long-term holdings. And here's the change chart for the week for all the stocks. So you can see PetQ dropped 5%. I sort again, so the losers are on the top, and Tandem is down 1.8% for the week. Everything else is up, and the two loser stocks were not losers last week. So this chart is not pointing out anything that I need to take action on. The benchmark shows that I increased about 5 grand from last week. My total gain is 51.7%, and against the S&P, which is up 9.7% for the same time frame. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel. Don't forget to hit the bell so you get alerts when I post a new episode.